We will be starting in a few minutes, guys, in a few minutes. Give me about 2 minutes as I finish setting up and we will get started. All right, guys, let's get into it. What is going on, ladies and gentlemen, and welcome to another Let's Talk Crypto. Today is Monday, the 22nd of April, 2024. It's about 11:44 a.m. Eastern Standard Time, and a lot of things are happening, right? Last week was insane. We finally got the Bitcoin halving event. The fourth one in its history was completed finally. And of course, we had all the crazy war stuff going on with Iran attacking Israel, Israel attacking Iran. So because of all that, Bitcoin dropped a lot, but then also recovered pretty quickly. So today we're going to be talking about the new phase that we've just entered into, which is the post-halving accumulation phase. So we're going to go into a little bit of details on that. We're going to talk about, and we're going to do an overall analysis on where we are. Talking about the current pattern that I see, which is a current breakout, where the resistance levels are, the trading range, liquidity pools, where we are in a halving cycle, which I just mentioned, and you know, some actionable steps that you can take, a plan of action, right? Because yeah, you can get all this information, but what do you do with this information? So I'll give you some ideas on what you can do with this information for either your long-term holdings or short-term trading, right? So let's go ahead and jump right into it. So first of all, let me transition over to the chart here, and let's just kind of take a look at the overall market first. Let me go ahead and refresh the page. We can see overall, the market is pretty much green, right? It's pretty much green all around. In the top, looking at the last 7 days, you can see that we're back into green. The top 10, the one what's outperforming the most right now, it looks like Cardano's up 10%. In the top 25, let's see, we have Near Protocol up 30%. Anything else that stands out? Not really. So that's pretty much what's going on over the last 7 days here. And if we look at the top crypto gainers and losers, once again, Near Protocol is at the top with a 30% gain there. We have Bonk as well at 29%. Bybit at 25, 26%. Top losers, we have Ondo down 12%. Tau down 11%. Ethena down 9.9%, Suncoin down 9.8%. So Yeah, what's surprising is a lot of the ones that are down are the ones that didn't really get affected too much during the big pullback, right? So that's kind of what we're seeing here. And the ones that are moving up were, they're down a lot over the last 7 days or so. Well, not over the last 7 days, over the last few weeks, they've been down a lot. So that's kind of somewhat what we're seeing here. So looking at the liquidations here, we can see over 100 million in liquidations, kind of in both directions. So nothing really to report there. If we look at the funding rate heat map, we can see that everything is pretty much in the green. So that's usually a good sign. When things start overheating, getting like this, you see how it starts getting yellow here and orange. See some orange, some yellow. That's when you have to start kind of worrying about a potential pullback. If we look at the last time that it got to this color, right? Starting, let's see, March 30th is when it's starting turning overheating here. And March 31st, it was really yellow. So if we look at the chart during that time, let's see, in March, we're looking at this is the 4 hour. Let me switch over to the daily really quick. Let me see. So here we go. So March 30th, you can see that we had nothing crazy. The 31st, we had a big green day. It was a 2.5% move up that day. And what happened after that, we had April 1st, right? We had a 2% move down. And then the second, we had a 6% move down, right? And that, it kind of coincides with the funding rates heat map. So that's just something to keep in mind. And it's a good thing to always kind of be watching and looking at, so you can get an idea of maybe when the market might be overheating, right? So that's something that we'll be watching here together every week. So other than that, let's go ahead and dive into the breakout right now, which you can kind of see here. And this is something we spoke about last week, the falling wedge breakout. So what is a falling wedge, right? And I mean, it's pretty self-explanatory. We have the price basically we have the price in a downtrend, right? But as it falls lower and lower and lower, that range gets tighter and tighter and tighter, right? And it creates this wedge pattern. So what happens usually when we have a falling wedge is that it's a reversal signal. Eventually, as it tightens up, eventually we're going to get a breakout and a reversal to the opposite side. Okay, so and that's exactly what we see here, exactly what we got here, right? So, and obviously just the pattern itself is not enough. You always want some confirmation. So a confirmation for a pattern like this is usually the volume. And the way that you pretty much see the confirmation is if, as price continues to drop down, volume decreases, right? So we kind of see here volume decreasing as this continued to get into a tighter and tighter range, which led to the eventual breakout here. So that was kind of the confirmation there. So now that we got the breakout here, is basically a change of character is what it would be called, which basically what that means is that we broke the trend, right? So we had this trend where we started setting here. This was a higher low. Well, let's say that because that was the first one. So let's not say higher low. Let's say a lower high, right? So why is this a lower high? Because we had set this high here, right? Then we dropped down, boom, lower high. So after we set that, boom, lower low, right? This is lower than this low here, so that's a lower low. So that was the beginning of this downtrend, right? And that continued. So we continued down, another lower low, lower high, lower low, lower high, lower low. And then right here, we set, it wasn't a lower high, but it wasn't a higher high. We kind of ran into that structure there where, you know, that breakout, that change of character there. And once we dropped back down and dropped back up, that we broke above this, we broke this trend, right? So this trend that was going on here, we just broke it, right? And that's why we're seeing this reversal. And that's what's called a change of character. The overall trend on the short term, we're looking at 4 hours, the 4-hour chart right now. But we got a breakout here, and now we got a change, right, in the trend. So now the trend is starting to go up this way. So now the way that you can kind of play it is, you know, look for these pullbacks back to this trend line, and kind of you can look to enter positions there and then ride the trend up. Because as long as we stay within this trend, with this new structure that we just began, then price shouldn't set any lower lows, right? We should only be seeing at this point higher highs and higher lows, right? So we had this right here, higher high, higher low, higher high, higher low, higher high. So if we're going to continue this exact trend, it should be higher low and then higher high. It should continue, right? So that's kind of what we're looking for. And based on that idea, that's how you can play your short-term trades, right? And we'll get a little bit more into those trades in a little bit. Let's just continue going through this really quickly with what's going on here with the price right now. So we have the falling wedge breakout. We spoke about that last week and the week before, right? We have the change of character, you know, with this reversal, which is a trend change in the short term, right? Because the short term trend was to the downside, right? Our trend was down, and now with this change of character, we've reversed it, and now our trend is to the upside. Now, if you zoom out, you're gonna see the overall trend is bullish, but you know, for people like me who are looking to do day-to-day trades and things like that, we're looking at 4-hour charts and stuff like that. So on the lower time frames, and on the lower time frames, we're now getting this change here and trend back to the upside. So so what's the next big level here, right? What are the next big levels here? What are our next resistance levels? So the main level right now is where we currently are, 66,000. You can see that this is a previous Fibonacci retracement level, and if we look back, right, in its price history, we can see that this was a big resistance there. We can see, other than that one, we can see that this was a big support there. If we continue going back, once again, big support here, big resistance, big support. Continue going back, resistance, resistance, support, and you could just see this on and on and on. Anytime in Bitcoin's price history, anytime it reached this level, there was a lot going on there, right? There was always a lot going on, a lot of buying and selling at every single time. So that tells us that this is a big level of resistance right now, because we're under it. It's resistance. Once we break above it, it will become support, right? So very simple ideas to kind of wrap your head around. So once we break above this level, my next target is up here, right? $69,000. That's going to be the next target. And if, once again, if we look back in history, we can see last time we broke above this level, we went directly to 69,000. Dropped back down, retested this as support, went right back up to 69,000, right? And you'll see that over and over and over again. Anytime we've broken any of these two levels, the same thing happened, right? We broke 69,000, we dropped directly to 66, right? And again, you can go back in history and you're gonna see the same thing. When we broke above 66, we went directly up to 69 and beyond. So I'm expecting something similar, right? Where we're gonna, once we get this the official breakout here, I'm expecting price to not take too long before it gets to $69,000. So that's the next overall target that I'm looking at in the more immediate short term. I'm thinking that we're gonna hit $69,000 rather soon, right? Potentially this week. So with that in mind, then we're like, okay, so let's kind of zoom out a little bit, and let's clear out the chart a bit as well to make things easier to see and understand, right? So if we kind of zoom out a bit, and we can go to the daily for this one as well. If we look at the daily chart here, zoom out, we can see two obvious things, right? The first thing is we can see an obvious support level here that's held this up basically the majority of this year. And then we see this level up here, which has played as a resistance. So what happens when there's a big level of resistance, big level of support, that creates a trading range, right? And we've been basically in this trading range for the majority of this year. So what happened down here? This is called a deviation below the lows of the range, right? And we see this play out a lot whenever there's a trading range. And the reason that this happens is because the market likes to trap traders, right? And we can see it happens here as well. Even though the range wasn't created yet, we can see that there, we can see it here. And those are basically deviations below the lows, right? This low here swept all of these lows basically for the last few days. This low swept that one. And then these here basically goes back to all the way back to this one, right? That we had back in March. So what happens is that traders are either setting stop losses here at this support, or just below the support. So when the price deviates below that support, guess what happens? All those traders get stopped out there, right? Another thing that happens is that traders are also longing the support, and they're putting their stop losses. Usually, if you're longing here, you're looking back, you're like, all right, this is a big support, and we can see that right here. Last time we bounced there. So what I'm gonna do is I'm gonna place my stop loss just below this one, so that if price does something similar there, I won't get stopped out. Well, guess what? The market knows that people are doing that, and the market can see that, right? If you look at liquidation levels, you can usually see that. So what happens? Price sweeps those lows to stop all those traders out. So then what happens after that? The traders, a very common way of thinking is, all right, if we drop below this support level, we're probably going lower. So I'm going to open short trades there, right? I'm going to open up some short trades because we're most likely going to visit lower levels at that point. They look at the trend. The trend is going to the downside, right? There's like a channel there going down, yada, yada. Whatever they have to do to convince themselves that a break below this support is a short trade. And what happens? All those traders get caught in that trap. Price goes up, stops all those traders out. So the market just stopped out all the long traders, right? That had their stop losses below the support, stopped out any traders that were trying to enter at the support with a stop below the recent lows, and stopped out all the short traders that flipped into shorts below the support and just took all that liquidity and ran with it, right? And that's what you're gonna see a lot of times in the markets. So that's why you have to be careful when you're playing these markets, that you're thinking more like what a market maker would be thinking about, what smart money is thinking about, rather than just a regular retail trader, right? So and that's called smart money concepts. But that's a bit more advanced, but that's the overall idea is that, right? The market knows what you're trying to do, So the market is going to get the majority of the traders out. They're going to stop them. They're going to take the liquidity. They're going to liquidate them, stop loss hunt, etc., etc. So usually what happens after a deviation is price goes, just continues on what it was doing, right? It continues in this range. So now it just deviated. Now I'm expecting price to now once again retest the top of this range. Now, it doesn't mean it's going to go exactly to the top, but somewhere up there. And that level up there is $73,000. So that's why the title of this video, of course, is $73,000 the next target for Bitcoin? And I believe that it potentially is here because we've visited the bottom of this range. We've deviated below the bottom of the range, swept all the lows, and now we're free to go up higher. So, you need confirmation, right? You can't just be like, okay, this happened, so now this is gonna happen, because that's usually not a high probability. And remember, we're always dealing with probabilities. So the way that we give ourselves an edge and give ourselves a higher probability is by finding confluence in other pieces to the story that's telling the same story, right? So I'm always looking for multiple pieces that are telling the same story. So what else? So we have the trading range that is telling me this story, right? It's telling me that we just visited the bottom of the range and now we should go to the top of the range, right? So what else is telling me the story? And that's when we look at Bitcoin liquidity. So on the higher time frames, on the 1 month time frame, this is what it's showing me, right? Remember, this is a heat map. The bright levels are where there's the most liquidity, right? So we can see two levels standing out, right? Very simple, very straightforward. We see this level up here, $73,000, and this level down here, $56,000. So, if someone looks at this, they say, okay, we can probably go to one of those levels. And again, this is just like what we spoke about. This is a smart money concept. We're thinking about how the market makers are thinking, what they're trying to do, and where they usually like to go with the price. They usually like to go where there's a lot of liquidity, right? So this gives us two different targets, 73,000, 56,000. So the thing is, there's no story that points to 56,000. There's nothing. I've been looking, I've been analyzing the chart. There's no reason for, technically, right, for Bitcoin's price to drop to $56,000. So I've been looking for confirmations of maybe there's something else that's saying that. I've been looking, for confluence, for something pointing at 56,000. There's literally nothing, right? There's nothing else that points to that direction. Historically, if we look at last year, if we look at the 2020, 2021 bull market, the average pullback was 21.5%, right? If we're thinking that the same way we have diminishing returns as Bitcoin's price matures, we're also going to be having diminishing pullbacks. Then the idea is that this bull run's, this cycle's pullbacks should be even less than 21.5%. But let's just say that 21.5% that we had a pullback 21.5%, right? That would mean from up here, to where we currently are, to where the current pullback is about 19%. So that would mean that we have to keep going. If we went to $58,000, which is another major level, that's about 21.5%. But liquidity is at 56,000. So let's keep going. 56,000. We're talking about a 24% pullback. Can that happen? Of course it can, right? Bitcoin, we never know. But there needs to be a reason outside of technicals for that to happen. As far as it's set up right now, if there's, the things with the war escalates, things like that could then change the price and change Bitcoin's behavior, and potentially drop the price down to 56,000. For sure, that could 100% happen. That is a possible scenario. But if we're not getting any of that, then there's no reason why Bitcoin's price should revisit that level, right? However, there's a lot of reasons why Bitcoin should go to $73,000. So because of that, I'm not even looking at this. I'm thinking there's no way that we hit this liquidity pool, right? It's not going to happen. So that means that our next target is up here, $73,000. So then now that's confluence with this that I'm looking at here, that we're watching, right? This trading range. The top of the trading range is $73,000. The trend just reversed, right? If we look at when we're looking at the 4-hour, we have a trend reversal. We have a change of character. We have higher highs and higher lows. So everything is pointing at this reversal, at this breakout to the upside, and at this and at Bitcoin revisiting $73,000, right? That's just on the technical aspect of it. Now, if we start taking into account the halving just happened, historically, what happens after the halving with Bitcoin's price? We are in a accumulation phase now. We start taking all these things in, then this is more confluence that Bitcoin's price should continue to go up. Not saying that we're gonna have a parabolic move yet, but we should go up and revisit at least that $70,000, $73,000 range. Let's take a look at. Let me see. We did trading range and liquidity pool. Let's take a quick look at the halving cycles now, right? So I have a chart here that I showed you guys last time, the last few weeks really, with the halving cycles that I set up, right? And this is our current halving cycle, right? So we went through the pre-halving accumulation, went through pre-halving rally, we saw the pre-halving pullback, and now we're in the post-halving accumulation. So the halving just happened. We're now in the accumulation zone of the halving cycles. What this means is that we're probably going to consolidate within this range. We're going to continue kind of what we've been doing here in the pre-halving pullback. It could potentially continue doing something like that, and eventually leading up to the post-halving rally, which is typically begins to really happen after 2-3 months, right? That's when we really start seeing those big moves to the upside. So that's pretty much what I'm looking at here. Now let's look at what Bitcoin has historically done. First let's look at historically what happened last time. You can see last time during the post-halving accumulation, Bitcoin just basically accumulated in this level, right? Before that, in 2016, same thing. We basically just kind of accumulated here, right? So now let's do let's look at really quickly here at how Bitcoin's price performed after these accumulations. I mean, after the halving in 2012, 2016, and 2020. So first off is 2020, right? This was the first official Bitcoin halving. So on halving day, Bitcoin's price was at $12.35. 1 month later, it reached $13.45. 3 months later, $30.25. 6 months later, $133. 12 months later, $1,000. And then 18 months later, $521. Let's look at 2016. On halving day, it was at $650. A month later, it was at $590, so it actually went down 3 months later, it was at 614, so it was still under the halving day price. But 6 months later, it was at $902. 12 months later, it was at $25.22. 18 months later at $15,000, right? Finally, let's look at 2020. What happened then? On halving day, it was at $8,821. A month later, it was at $9,889. 3 months later, $11,895. 6 months later, $15,701. 12 months later, $56,620. And 18 months later, $64,800. So what trends, what can we find from these that makes sense, right? The only year where it was a little weird, where Bitcoin was negative at all after halving day, was in 2016. So a lot of things can contribute to this. I'm not sure exactly what may have been happening during this time, but it's the only time in Bitcoin's history during the halving cycle that Bitcoin's price was less than the halving day price. Because in 2012, the 1 month, 3 months, 6 months, they're all green, right? In 2020, the same thing, all green. So 2016 was the only one that within the first 3 months, it was still in the red. It was in that accumulation area. But what all of these, all the historical data agrees with is that 6 months from now, we will 100% be higher than we are right now, right? 12 months from now, same thing, and 18 months from now, the same thing. And that's the other thing that this data gives us. We see that on the majority of these, 18 months is really the peak for the bull run. We see here, if we go back to 2020 is the only time that 12 months later was higher than 18 months later. And remember, back then it was still a lot. It wasn't mature. It was very new. It was only 4 years old at that point, right? Here we can see that 18 months was the highest price. And of course, we know that in 2016, Bitcoin peaked at $20,000. But it's interesting to know that exactly 18 months later, it was at 15,000, right? And then the same thing here with 2020, 18 months later, it was at 64,800, while 12 months later was at 56,620. And, obviously we know that the peak was at 69,000. So these are all just interesting data to know and to take from this. And basically the main thing that we take from it is that hold for at least 12 months. In the first 1 to 3 months, we might go higher, we might not. There probably won't be a big difference in price within the next 3 months, right? That's what this data is telling us. There's probably not going to be anything crazy, right? We see here 1 month later, 12%, 3 months later, 34%. Nothing crazy. But 6 months later is when it really starts to pick up. We see plus 78%. And 1 year later is when we're in that parabolic move, right? 541%. So for your portfolios right now, your state of mind, your way of thinking right now should be to just hold, right? For at least a minimum of the next 12 months. You want to be holding for at least a minimum of 12 months, potentially 18 months, right? This is going to be the sweet spot between 12 to 18 months. So basically, I would say the best way to potentially play it is to, at the 12-month mark, to maybe start selling at that point. Because the thing is, remember, we don't know where that peak is. So we want to try to use all this historical data to look for the best way to maximize our profits overall. And all the data from the past 4 halvings, for the past 3 halvings, tell us that between 12 to 18 months is the sweet spot to begin taking profits. So we're going to be, for the next 12 to 18 months, we're going to be running with this idea. But of course, we're not only going to make decisions based on this one idea. We're going to be looking at a lot of different things that could potentially help us make a better decision on when that peak potentially is. So I'll be doing a video on that actually on, I think there's like 7, 8 or 9 different things that have been pretty accurate when calling for the Bitcoin tops and bottoms. So we'll probably be taking a look at those. I'll do a video going over all of that. So with all that in mind, right now we're in the, let me switch it back over. We're in the post-halving accumulation. So don't make any rational decisions for the next 1 to 3 months. We saw it in the data, right? 1 to 3 months, we're not really expecting anything crazy. We're not expecting any crazy moves. Sure, we can go higher, but you know, I'm not thinking the next 1 to 3 months anything crazy is gonna happen. But after that, that's when we can really start thinking about a parabolic move to the upside. That's when I think we start thinking about a test of $100,000 that a lot of people have been talking about, right? I think that's going to happen after, most likely after the 3-month mark, is my thought process on it, just based on historical data and all of that. So that's pretty much my ideas here. Now, what I'm going to be talking about is how can you use this data to, you know, maximize profits and make the most money possible. Let me take a sip of water real quick. We already spoke about that 12 to 18 month sweet spot. So for long term, right now I'm still I'm still in my dollar cost averaging phase. I'm still accumulating, and I'll probably continue buying all the dips. I'll probably continue to dollar cost average into all my favorite projects, and basically do this for at least the next 3 months, right? I'm doing this during the post-halving accumulation phase. I'm gonna continue doing this. It's the same thing I've been doing during the pre-halving accumulation, during the previous bear market, during, and you know, all the other phases. I'm still accumulating. I'm gonna stop accumulating once we break into the post-halving rally phase, right? That's the final phase, phase 5. That should be after the 3-month mark. So for at least the next 3 months, I'm still accumulating crypto, and you guys should feel free to do so as well. And my plan with all this crypto that I've been accumulating is to hold it for at least another 12 to 18 months. So 12 to 18 months is going to be that spot where I'm really looking to start aggressively taking profits at that point. So for at least the next 3 months, I don't mind adding more to my portfolio. Now for the short term, how can you use this data to maximize your profits and you know, which basically is trading, right? So here I like to I like laddering into positions here on any pullbacks, right? So what I've been doing lately is just laddering in at least 3 different entries, right? So if we go back over to the 4-hour, we can see price right now pushing up on that 66,000. But if we look back here, basically what you can do is, as Bitcoin, if Bitcoin drops, right, we know that this is support here, which is basically $65,000. So that's my starting point. I would ladder into there. If it were to continue down, then I'd be happy to buy between $62,000 as well. If it were to continue down, $60,000, and finally, basically that's probably my third entry. However, because we changed the trend, I don't think that we're gonna have those opportunities like we're kind of getting here, right? I don't think we're gonna be going that low. So you have to kind of change up the way that you're trading now. So now you can play breakouts, break of structure plays, right? Trades. So a break of structure is basically, we set this high, right? We set this high here, then we set a higher low, then we went up here, we retested this high, and then we broke it. So you would enter basically on the break, right? And if you're entering on the break, then you're setting your stop loss below the higher low, which would have been around here. So that's where your stop loss would have been if you entered here. And then and now you could kind of do the same thing here. If we get a pullback or something like that, then when we start breaking this thing here again, you can either set your stop loss below the higher low or below this higher low, and just kind of do that same thing, right? Because right now the idea is that we've set a new structure. We're going to be setting up new higher highs and higher lows. So you can enter breakouts and set up your stop losses below the higher lows, because the idea is that price is not going to sweep or revisit those higher lows, right? Due to this trend change. You could also draw like a line here and see if it respects it, and use this to buy on any pullbacks, right? So if it were to go down here, then that's an entry right there. You can set your stop loss basically below this higher low right here that it already set, and then take profit as price goes up. And we already spoke about what our next target is, which is up here at 69,000. So that could be where you're taking profit, right? And you can, anytime that price goes like this and gets back onto this trend, you can add in like that. You can add to your positions until we hit that. So again, that's just an idea. There's a lot of different ways that you can play it, but that's one of the ways that I'm currently playing it right now. So I'm gonna take some time now to answer some questions on the in the chat. So if you guys have any questions about anything that we've already covered, or anything going on in crypto, drop it in the chat right now, and I'll be more than happy to answer those for you. We got Rivers in here. What's up, Rivers? Ibrahim, Crypto Crunchy says good info, but a little more volume. I feel like my volume is pretty good. Is anyone having issues with the volume? Let me know. I could raise my volume, my mic volume a little bit. So if you guys are tuning in now, you guys can watch this from the beginning. We've basically did a full breakdown and analysis on exactly what's going on, what I'm seeing right now in the charts, what I'm seeing right now in the markets. And we went through the current pattern, which is a breakout reversal pattern. We went over the change of trend, the next resistance levels, the trading range it's currently at, and why I believe that $73,000 is the next target. And also I broke down what I'm doing with my long-term portfolios right now and how you can use this information and implement it to take some short-term trades as well. So feel free to watch this video from the beginning if you missed any of that. All right, so I don't see any questions here. So what I'm gonna do, let me see if I still have my questions from yesterday's Q&A on Instagram, and I'll answer some of those. Let's see. All right, so I have a few here on Instagram. So I had one question. Someone asked, do we still have to hold Bitcoin? I'm dipping badly currently. I bought Bitcoin at 72,000 plus. So basically that's, somebody bought the top, right? So what do you do in the situation where you bought the top, right? And of course it's the top for now. So the way I see it, you have three different options. you have three different options if you bought the top, right? Option one is sell now at a loss. And, that's definitely the worst option. I'll tell you that right off the bat. You can sell now if you can't take the emotional ride and roller coaster that cryptocurrency and investments are. Maybe investing is not for you, right? It's not. I think it is and could be for everyone, but you have to really educate yourself in order to detach your emotions from your investments. So if maybe you're not ready, then sell at a loss, take that loss, and use it to hopefully learn from it and go from there. It's honestly, in my honest opinion, the worst thing that you can do right now, but some people might want to do that. Now, the second option is forget about it, right? For the next 12 to 18 months, we just spoke about this. Forget about that investment. Pretend it doesn't even exist. Set in your calendar, set a reminder 12 months from now, and then go back and look at it, right? Then I'm almost 99% sure price is going to be a lot higher than what it is right now. So that's the second option, right? And although this is a great option, much better than the first option, I still don't think it's the best option. So that leads us to option number 3, which is dollar cost average and lower your entry point so you hit profit sooner, plus increase your overall portfolio and profit. This is what I would do myself personally, right? So what this means is if you bought at $72,000 and you buy again now at $66,000, if you enter the same amount, right? Let's say that you bought $100 worth at $72,000, you buy $100 worth at $66,000. Now, instead of your entry being $72,000, your entry is going to be what, 68-ish, 68, 69, around there, right? That's your average entry is going to be lower. So now you don't have to wait till $72,000 and beyond to be in profit. Now, if Bitcoin just goes up to $68,000, you're going to be at break even, and anything above that, you're going to be in profit. So that's what I would personally do. And you can do this by dollar cost averaging, meaning you don't have to enter it all right now up front. You can enter maybe $25 today, $25 next week, $25 a week after that. So that'll average out. That'll give you an overall safer average, even though it might be the best if you just put put it $100 all in right now. It might give you a better average, but in reality, we don't know what price is going to do, in the next few weeks. So because of that, if you want to play a little bit safer, you just do, a little bit at a time. You average your way in. So $25 at a time, for example, across a span of 4 weeks, if you want to do $100 total. So that's the final way I would do it. That's what I would personally do, right? And I asked the chat what, based on the previous story, which option would they prefer? And 8% said option 1, which was to sell it at a loss. 40% said option 2, which is wait 12 to 18 months, and 52% agreed with option 3 to dollar cost average. So I'm glad that majority of you agree with me. Let me know in the chat what would you guys do, right? Let me see what other questions that I get here. So someone asked me about how I got into crypto, and it's kind of a long story, so I answered it in my Instagram stories if you want to read it, a short version of it. Someone asked how high in the next 3 months. Again, I think we will be higher than we are right now, but I don't think it's going to be anything crazy. I think we're going to stay within this range, which is anywhere between $60,000 to $74,000. So in the next 3 months, I think we probably stick around that range. Let me see. Will Bitcoin go higher in the upcoming days? It could, right? But we don't really know. But based on the new structure that Bitcoin has set, I do believe that we will continue slowly progressing to the upside to a higher price. What's the lowest you think Bitcoin will ever reach again? Ever reach? I mean, who knows, right? That when you're talking about ever, like that's too much time. Like that's anything could happen, right? We don't know the future. However, I've been saying it for a few months now. Well, not a few months, but a few weeks. That I do think that $60,000 area, that zone, is the bottom for this pullback. I've been saying that for a while, and we've seen $60,000 continues to hold. So I continue to believe $60,000 is probably the lowest price that we're going to continue seeing, and we might not see it again until the next bear market. So although we're still in that range where we can once again revisit $60,000, I still do believe that that's the bottom of the range here before we go parabolic. Let's see. Do we dip from here before the next run? Again, we're going to be accumulating in this range. There's going to be pullbacks along the way, but the overall trend, we are setting up higher highs and higher lows. So hopefully we can continue this trend in the short term and not have any big dips. When does the bull rally start? Again, that's in the post-halving phase, which usually happens 3 months after the Bitcoin halving event. Let me see what else. How do you properly invest in crypto? This is a good question, but this is going to depend on where you're located most likely, because different countries are going to have different ways of getting into crypto and buying crypto. But for the most part, it's very straightforward. You buy the crypto yourself in your wallet, right? You do not buy crypto by giving someone else money. So there's a lot of scams like that out there. You have to be very careful about that. So the proper way is, and the easiest way, is to download an app like Coinbase, for example, which is a publicly traded company. So they're insured. They have, basically everyone is watching every single thing that they do, and you can see you can see everything that they do, all the money they have coming in, everything that they hold, et cetera, right? So I think that's one of the safest way if you're in the US like me, to go from your bank account into Bitcoin. Then as you start learning more and educating yourself more about crypto, then you can learn about how to properly store it in your own wallet with your own keys, right? So basically you want to get the crypto off of centralized exchanges like Coinbase and store it yourself privately where you own the keys yourself. So that's a little bit more advanced, but that's the next step in the journey. But the first step in the journey is just buying Bitcoin, going from your bank account into crypto, and a platform like Coinbase is the easiest way to do that. Let me see any other questions here. How much is a good starting point to buy Bitcoin for as a beginner? As far as the money, that I can't answer that, because that all depends on your situation. I don't know your personal financial situation, so I can't tell you what that is, right? I would just say start with a little bit, and then just educate yourself and go from there, right? If you have a stock portfolio, just start with like 1% of your portfolio and then increase it as you educate yourself. So that's all going to depend, because it's not going to be the same for someone starting out with, maybe you only have a few $100s to start out with. Maybe someone else has a few $1,000s. Maybe someone has a few $100,000, and maybe someone else has a few $1 million. So there's a lot of different levels to it. So because of that, I can't give you an answer, right? I don't know what your circumstances are. I don't know if you already have a portfolio, an investment portfolio overall. I don't know. There's so many variables that there's no way for me to answer that. But I think the general answer: start small, educate yourself, and grow it from there. Let's see. Someone asked, why did this halving not affect the price of Bitcoin? It did affect it, right? Bitcoin was down to around $60,000. Because of the halving hype, it went back up to around 63,000 when the halving finally happened, and now we're sitting at 66,000. So it's definitely affecting it, but it's not what you're probably like what you probably want. You want the halving to happen and you want Bitcoin to double instantly, right? It doesn't work like that. We saw it in the data when going back through the last three halvings. The first 3 months are pretty slow. It's after 3 months that we really start to see the effect of the halving in Bitcoin's price. And we also seen that in the cycles, the Bitcoin cycle, the Bitcoin halving cycles, right? Right now we're in the accumulation phase for at least the next 3 months. After that is when we can start looking to that parabolic move to the upside. So wait, you have to be patient, wait at least 3 months. After 3 months, I think around 6 months, we'll see a price potentially double from here. And at 12 months, it should be even higher than that. Let's see. So I think that's pretty much pretty much the majority of the questions I got here. I see another question in the chat. I see Gord Brody. What do you think about Ethereum price? Will it reach its all-time high soon? Yeah, I definitely think it's gonna reach its all-time high soon. Depends on your definition of soon. We recently let's see where it went recently. So we recently went above $4,000. Its all-time high is 48.75, right? So its all-time high is 48.75. We recently went as high as 4,100, right? So we're literally right there from that happening. We're so close, right? So I think it's only a matter of time. It's gonna happen. I think it's probably gonna be similar to Bitcoin, where it's gonna happen probably after the 3 month mark, right? After 3 months, I think Bitcoin starts hitting new all-time highs again, and I think that's when we can expect Ethereum to hit all-time highs. Also, another thing to note is that Bitcoin, you can see in the last year, Ethereum is up about 70% versus Bitcoin is up about 137%, right? So Bitcoin has basically doubled Ethereum's performance. We know that eventually this flips, right? Ethereum has always outperformed Bitcoin during a bull market, so it's only a matter of time. But in the beginning, money always comes into Bitcoin first before eventually going into altcoins. So that's something to remember there. But I'm definitely very bullish overall on Ethereum, and I think that at least in 3 months, after the 3 month mark, I think that's when we can really expect to see Ethereum really start going beyond its previous all-time highs. I have Tim and Ryan here asking about STEPN. So Tim and Ryan. So, man, it's a tough one, and I always get a lot of these questions, right? Because I did do a lot of content on STEPN. But about a year ago or so, more than a year ago at this point, we basically had a fallout with STEPN with its team. So I personally did. um, we had different views, right? They started going towards that, towards almost like making it a gambling game, because they didn't know how to, with price dropping, they didn't know what to do to burn more tokens. So they started basically putting in gambling aspects into it. I didn't really think that was, a way to go. And I gave some ideas on, different mechanics that they can implement into the game, etc. For everyone, not just the top 1% of the people to be able to take advantage of the game fully, and potentially make as much profit as possible from the game overall. The issue was that they didn't like when I did that. So I did that internally first. Um, they ignored me. I got no replies, right? So then I took it to Twitter. I made a post, a Twitter thread on it, on different ways to improve the game. And they basically called a meeting with me, to tell me, and this is the first, they finally replied to what I was saying, but it took all that for them to reply. And then their reply was basically, take down the post, don't create any negative posts about STEPN. Even though it wasn't a negative post about STEPN, it was a post giving different ideas and opening the community to thinking of different ideas to make STEPN better, and how we can, as a community, come up with solutions for the problems STEPN was having. STEPN didn't want to acknowledge any problems, so they didn't like that I made that post, and they got really nasty with me. And I'm talking about Jan. I'm talking about all of them at the top. They were the ones that got really, really nasty with me. And basically, I had a fallout with them, right? I saw kind of their true colors behind who they were as people, and I didn't like that. They didn't want me they wanted me only to put content out that was basically shilling, right, the STEPN, or just only talking about the good stuff and not talking about the obvious. But I couldn't do that, right? I was here creating content for crypto overall before STEPN, and I wasn't gonna change the way my brand and the way I make content just for STEPN. So that was my issue. That's the issue I ran into with them, and because of that, I stopped creating content overall with STEPN, and I honestly stopped using STEPN. I stopped everything that had to do with STEPN, because I could no longer support a team and a project that tried to do that, right? That wanted to cover up its blemishes, and wanted to cover up the obvious things going on in the market, and wanted to cover up the struggles that the community was going through, and only focus on, the next thing that they were going to do. So they had like the more, right? Then they had the next, whatever the next thing there was, whatever game it is, the gas heroes, I don't know, all these things, right? I couldn't do that. I couldn't do that. And I let them know, I let the community know, and I left, and I stopped covering their game at all. So that was what I ran into, right? Beyond that, though, on a higher perspective of as long as thinking overall in crypto terms, right? Play to earn, and this is not just STEPN, right? This is just overall. This, you can see it in Axie Infinity. You can see it in any game that's ever gotten big. You'll see this same cycle. Play to earn is not sustainable at a high level, right? So meaning when it gets mainstream and there's a lot of people going into it, it's not sustainable. At least the model that's profitable, that's been profitable, that's had crazy returns, right, is not sustainable, because the thing is, you have to think about, it's a inflationary coin that you're receiving as a reward to play the game. As more and more people use it, that means there's more inflation behind the coin. So there's no way, unless you really figure out a burning mechanism with a purpose that's not gambling. There's really, it's very difficult to keep up with the inflation, with the printing of coins. So what happens is that the coin inevitably will always and forever fall down and lose value. We see that in the US dollar, right? The US dollar is inflationary. They're always printing, so its value is always falling. And you can look, if you look at any chart with play to earn games, you're gonna see the same exact thing, right? So let me see. Let me pull up the GST chart here. So we can see, let me swap over. We can see here, like, it's dropped, and there's really no coming back from that. Like, it's very, very difficult to come back from this. So we had this one pump here at 1,000%, and it's already pulled back over 70% from the highs of that. So it's tough, man. I do think that during the bull market, there is potential for this to pick up a little bit. Do we ever see the prices that were up here, $1, $2, $3, $4, $5, $6, up to $9 at one point? I don't think so. I just don't see that happening, because the reason that this is so steady now is because a lot of people left the game, right? So there's not as much inflation as there was before. If price starts to go up again, guess what? People will start jumping back into the game, and this will just happen all over again. And we can see that with any play to earn game, it has kind of the same exact cycle. And this one's only showing, let me see if there's a chart that shows more history, because this doesn't show the full history of it. I don't really see any, but you get the idea, right? Inflationary token it will always go down long term. So that's my issue with STEPN, and not just STEPN, but any play to earn game. It's an inflationary coin that you're getting, so it's always going to go down. So one of the lessons I learned during the last bull market was to stay away from any type of inflationary projects where it's just constantly inflating and printing new coins, because especially if you have to buy in up front to then try to earn your money back, it's gambling at the end of the day, because you're hoping that you can get your investment back before the value of it drops further, right? And I have a lot of videos where I made a lot of charts on, your ROI. You can make your ROI back in 28 days, in 35, in 50 days, whatever it was. The issue was, as you got closer to that 28-day period of getting your ROI back, the value of it was dropping. So then now that 28 days turned into 40 days, 28 days turned into 60 days, turned into 100 days. And you were just chasing something that you were chasing the carrot in front of you that you just could never reach, right? You just kept chasing it, and its value kept dropping. So maybe now in the bull market, it does stabilize a bit more. And if it stays somewhat stable, I mean, it's a great idea overall. I think STEPN, the overall idea, throw the team out. If the team had nothing to do with it, I think the overall general idea was great. I loved it. I love having a reason to go out and work out and do some cardio, do some running, do some jogging, walking, whatever it was. I loved that part of it, right? But at the end of the day, I was there at the same time. I also wanted to make money. So when the team started playing with the funds side of it, that's when I was like, I can't be a part of this anymore. So yeah. So I do have an idea that I do want to do. I want to create a video, basically a STEPN update. I want to have a few people in the community that I'm still friends with, where I kind of do an interview series where I ask them questions about it, and they give me some answers, and then I just kind of take it all in, give an overall, um, you know, my conclusion of it, and I think that'll be a good maybe full circle video where I kind of come back years later and do, at least one more piece of content for Steppen. But as far as what I was doing before, where I was making a bunch of different content with different ideas on how to make your money back, how to flip things, how to earn and all that. I don't know. I don't think I will be doing that. And it's not because of the project. It's just because of the team. I can't get behind the team. I can't trust the team. And if I can't trust the team, I can't put my money into that. You know what I mean? So it's unfortunate, but it is what it is. Yeah, Tim says they've been very bad about responding. You tried to reach them a few times, but they never responded. Yeah, that's something that it's been like that for the last few years. It's nothing new. Yeah, Ryan. That's what I told them the same. I literally broke down all the numbers, and I showed them I had over 1 million views in a few months on content with Steppen related content, right? So I was literally at the time their biggest promoter, and I was never paid by Steppen. Like, I wasn't doing it to get paid. I was doing it just because I thoroughly enjoyed the game, and I enjoyed doing it. I enjoyed analyzing it, and looking at the data, setting up spreadsheets, trying to figure out what the best way to make profits was, et cetera, et cetera. And because of that, a lot of people are also interested in that, which garnered a lot of views, a lot of attention, and garnered and a lot of new people joining the project. So I know that I personally, because of the content that I was making, I had probably thousands of people that entered. I don't know how many exactly, but I'm thinking close to, my videos have over 1 million views, so close to, not 1 million people, but close to 20-50,000 people maybe. I don't know. And I never got paid for any of that. I did all that for free. So it was shocking to me what a hard time they would give me about everything, right? It was just crazy. And then what's even crazier is that they have these marketing budgets that they pay out to supposedly influencers or something, and I have never seen, back then, I don't keep up with it now, but I had never seen any influencer promoting it or making content around it at that time. Any like known influencer, right? So I have no idea who they were giving that money to. And again, this is part of the reason that I can't trust a team, because they're not transparent about what they do. So yeah, it's unfortunate, but it is what it is. I appreciate you guys, Ryan and Tim. Brody, yeah, I love Chainlink as well. I'm big on them long term. I definitely have them. I have a nice little bag set up on Chainlink right now for the long term. Overall, the thing with technicals on altcoins is that they're not very reliable, because right now they're following Bitcoin, right? So that's the issue with it. That's why I don't do a lot of technical analysis on altcoins, especially in times like these. But what we can see here is that Chainlink just dropped basically 50% recently, and now it's moving back up. So I know that this is a big range here. That $15 area is a good spot to accumulate. It's gonna move eventually. We have the bull flag similar to Bitcoin and all that, so it's gonna move eventually. I expect it to eventually get up here. But again, I think we have to wait 3 to 6 months to really see some big moves starting to happen. So I think we just got to be patient. I think we take this time to continue accumulating here. And I think it's only a matter of time before we break this previous all-time high. I think Chainlink could probably hit $100 plus during this bull run. So, and it's currently at $15. So I think probably an easy 10x from current prices in the next 12 to 18 months. Michael Johnson, new subscriber. Hello. Hello from an American in the Philippines. Thank you for subscribing, Michael. I appreciate it, my brother. How's the Philippines going? That's crazy. An American in the Philippines. Ryan says, much respect. I'm staying subbed for the TA and knowledge. Thanks for clearing that up. Their loss. Yeah, 100%, Ryan. I appreciate that. Yeah, I'll be covering a lot more content here. And this year, I'm going to be doing a lot of content on ways to make money without having to basically have to pay projects upfront fees to try to make money, right? So like play to earn is you have to buy whatever their product is upfront to be able to use it and then hopefully make your return back, right? What you had to pay. Staking is another way to make fees, but they don't pay a lot. It's kind of dangerous. So I'll be covering a lot of different videos. I'll obviously, talking about trading stuff, but I'm also doing stuff around options where it's selling premium. And I think is killer right now. I definitely recommend that you check that out. And yeah, man, I appreciate you. Thank you for subbing. It's hot here. Yeah, it's hot where I am too. I'm in South Florida, so very hot here. All right, guys, we've been live for an hour and a half. I didn't even notice, but I do feel it in my stomach because I'm really hungry. So I think I'm gonna wrap things up here. Thank you guys so much for tuning in. I will be doing another live probably towards the end of the week. I'm thinking on Friday. And I will also be working on a new video for you guys. So I'm working on a video. I think the next video is either talking about the halving cycles or about the some of the content that we covered today on when to sell, right? We're going to talk about that, the optimal strategy for buying and holding Bitcoin, when to buy, when to sell. So we'll be talking about that. Yeah, covered calls. Yeah, man, that's basically what I've been doing in with Bitcoin though. Bitcoin covered calls. So I did a video on that already on how to do those. And man, it is killer because in the stock market, covered calls, you can make 1 to 2% per month, which is great. In crypto, everything is 10x. So those 1 to 2% per month selling covered calls, you do 10 to 20% per month in crypto. So if you haven't done it yet or you haven't checked it out, I definitely recommend checking that out. It's my last video I covered on how to do that, on how to set that up. So definitely check that out. But that's it, guys. Thank you guys so much. I'll see you guys on the next one. As always, peace and love. See you guys.